the quality of the amenities and the things we're offering to be more commercialized, because that's where the industry is headed. Okay. Now that doesn't change the mom and pop feel and the whole hospitality, Airbnb, vibe that we're trying to give our guests. That's not the goal at all. The goal is to give a quality experience, but more importantly, and this is the key, a consistent experience. Hey everybody, welcome back to another episode of Cash Flow Positive. I'm your host, Kenny Bedwell, and we're talking about the summer outlook for 2026, what to expect. We made it to summer. First off, congratulations for those of you who are currently hosting properties. We absolutely made it. This is the highlight of the year for most people is summertime, Memorial Day, all the way to Labor Day. Obviously, a lot of our properties make money throughout the rest of the year, but the summertime is the peak season in 90% of short-term rental markets. So we made it, guys. This is it. This is where we make a significant chunk of our earnings, and it's exciting. I love summertime. Summertime bookings, I'm like, yeah. I just got a booking the other day for the Kentucky place, 3 nights, $10,000. It was like $10,246, but $10,000 for 3 nights. How awesome is that? Love those kind of bookings. You're like, mortgage is covered. Awesome. Really, your expenses, everything's covered in literally one booking. It doesn't get any sweeter than that. So what I want to focus on today, besides celebrating that it's finally summertime, is what the outlook is like. So what have we seen over this year across the Airbnb industry or the short-term rental industry for the data side? What are we seeing for the summertime? What are we seeing for summertime trends and demand? And what should we expect this summer? And how should you be focusing on your 2026 summer Airbnb short-term rentals and beyond? And then on top of that too, if I was purchasing this year, how am I approaching that? Because we are getting through it's crazy to say we're almost through the first half of 2026. That's kind of scary to think about. I feel like it's only been like a month or two of 2026, but it's been almost 6 months. That is crazy. It's been over 5. So wow, insane. So we really need to start preparing for that second half. And if that second half is acquiring, you need to buckle down and get serious about it, super serious about it, because of the amount of people that are going to be getting involved. We will hit that as well. All right, let's dive into it. So let's talk about data, the macroeconomics first. So the first 3 months of this year, so the first quarter of 2026, were a little rough for Airbnbs in general. Most markets were down about 5 to 10%, some even down a little bit more. However, in April, when spring break started to hit, the market slightly turned up. And we actually found that April was about 3% higher year over year compared to April last year. That's incredible. That's amazing. Given all the uncertainty in the markets, general markets, the economy, with gas prices rising, that can impact travel and, our destinations. And so we were worried about that. And then we've just had May, and May has been trending up as well. I don't have the final numbers for May yet. I'm recording this still in May, at the end of May, but I would presume, based on what I was seeing for the first part of May, that the numbers are actually at the same or slightly higher overall for most markets, which is great news if you're an Airbnb host. And that's a great news for where things are at, especially with gas prices being so freaking expensive. Okay. And, a lot of us are owned in drive-in destination markets. And so the real question is, would the war in Iran have an impact with, causing the gas prices to increase and impact essentially vacation rental markets, drive-in destinations only? And the answer is right now, no, it really hasn't. I think that part of this is due to the actual stock market and businesses doing better than expected. I think that people were expecting more of a downturn from Q1. And when that didn't happen, there was a little bit of a bump back. And that's generally impacted the overall market positively, especially the short-term rental market and travel. And so people are still taking vacations and they're still doing their trips and their plans and everything. And I think there's a little bit of cautiousness still in the markets today. The typical traveler is definitely being more budget conscientious, but there are more options as well. And that just goes back to market saturation. So for the properties that have a moat, they're less impacted by that. And so anyway, that's just like fun, like, hey, macroeconomics, what happened this year? Now looking at summertime, we're actually seeing positive trends. I was originally expecting ADRs to significantly drop, but they're really on par with what they were last year. I wouldn't be surprised if summer 2026 is a tick or a hair above what it was last year, which is great news, especially because the last 3 years previously, it was down every single year from all-time highs in 2022. So we are in a good spot, ladies and gentlemen. I think market stabilization of what short-term rentals can do and become, I think we've kind of in that realm, of like, this is probably pretty normal, in terms of like, adjusting for highs and lows. Now, obviously, there can be, if there's a dramatic dip in the economy or a big recession or, another COVID or something, a black swan event, you would see a bigger downturn. But in terms of like stability, right? We had this high peak in 2021, 2022, and then back down. But now it's starting to stabilize and see a steady, like, what should I expect? Okay. But keep in mind, that doesn't change the trajectory and the professionalism of hosting that's going on in the industry, where everyone's doing professionally designed properties now. Everyone's adding all kinds of amenities now. Everyone is upping their game with their software and their management style and everything. It's the professionalization of an established industry. And when we see professionalization, we also see stability. Okay. And that makes things more predictable. However, returns get more compressed because people know what to expect. And there's less and less properties out there that are going to exceed the market expectations in terms of the types of returns you should expect. So for a buying person, someone who's looking to buy this year, it's going to be harder than previous years. And relying on what an agent is selling you is just like, just don't. Like, look at the data, look at the numbers. I'll talk about this for a second. I have noticed, and maybe if you're plugged into the industry very well or whatever, but I have noticed more and more vendors in the short-term rental space getting more competitive. Like, it's getting tougher, even from like STR insights and how we work and, helping people find deals and how we acquire clientele. Our cost per acquisition has gone way up. And I think that's impacting everyone. It's impacting the gurus who are selling courses or masterminds or whatever. It's impacting realtors. And, the competition, the amount of realtors and the amount of buyers is a little bit less than it was the year before. And, everyone's competing for the same thing. And I think before there's plenty enough for everyone to win and to be successful. But now there's so much more competition. There's so many more designers and they're all pretty good. Like, I mean, there's some that are kind of bad, but like literally like there are a ton of good designers out there. And I'm seeing designers having to market more what they do and to share, on social media, oh, I did this property, blah, 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 and just posting more to try to attract more clientele because it's just more competitive. And with the adoption, I'm not going to pick on designers, but, I see it with photographers. I see it with, I mentioned realtors. I see it with brokers. I see it with, the gurus and the courses and this and that. There's just so many people. Even I was thinking the other day, and there's another company doing trash can like rollout. Apparently there's like 2 or 3 more because I asked somebody, I was was like, have you noticed this? Like before it was like this company called Can Monkey that would literally just, like it was a service. People come and they roll your trash cans out and then they come and for your short-term rentals and they take them back. Well, there's like 3 or 4 companies now doing that. The, AI messaging platform, there was HostBuddy, and now there's like 2 or 3 other ones now that I'm hearing about. And people are like, oh, well, this one's better and more advanced than HostBuddy. And it's like, it's like we are really in this almost saturation of vendor space. Like there's so many options, and that, I think that we're going to see some sort of consolidation of that over the next year or two, where people get bought out or people, close or whatever that is. But I just think that's really interesting, an interesting point, and not really relevant to the summer outlook of 2026, but something to pay attention to, and what that means for you. Why is that relevant for you? Let's start there. As a host, as a person who works with vendors yourself, now that there's more options, you can now ask for more discounts. I encourage you to do that. Hey, I know that there's another company offering the same service or option. Can you match the price or do it cheaper? Like, it doesn't hurt to ask, right? You'd be surprised, especially with all these companies. A lot of these companies are newer, so they're hungry for business and they're hungry for quantity of business. They're going to be willing to, give discounts and things just to get the business in the door, and you can leverage that. So leverage it, do it. Okay, cool. Now let's go back summer and looking at the summer. So we talked about the macroeconomics of it. We feel really good about summer. It's exciting, awesome. We're in it. We've looked at the data. And now let's talk about the actual, the nitty gritty of what to do. So first off, for those of you who are new to short-term rental investing and, acquiring short-term rentals, or you don't have a property yet, or wherever or maybe it's your first summer, you're running a property. Summertime for a lot of Airbnb hosts is more, because we are high occupancy, high guest turnover. I mean, we have same day turnovers. People are paying large amounts of money. Like we are so focused more focused on the day-to-day operations of making sure things function, because it's so critical, because we're making all this money to, making all the money. That's why it's critical. My point being is that a lot of hosts hunker in on making sure the day-to-day operations are going smoothly, and that's fine and dandy. But at the same time, you always need to be thinking about the future. Okay. And I like to say 6 months out minimum in terms of what you're going to do in tracking the competition. I recommend that you audit. Summertime is when the most listings are listed. So you will see people who shut down their properties during the wintertime. They're not serious investors and they'll list their properties. Okay. So summertime is a great opportunity to reevaluate your competition. Who's out there? What amenities they have? What are they offering? And I guarantee you'll be shocked to see there are more properties and there's nicer properties and there are more amenities. What amenities do they have? What are they trying to do? Is it helping them? Do they look nicer? Are they marketing it well? Learn from that. Summertime is a great time to do that, to see what the competition looks like, instead of waiting till the wintertime when it's slow and then being like, well, why don't I have any bookings? And you're being reactionary instead of proaction. Yeah. I mean, I did a podcast episode months ago, maybe even a year ago, about that. But that idea of being reactionary, people are reactionary and they're not proactive in terms of, staying ahead of it. And so what am I focused on? We're looking at our competition, but another thing that I've really been stressing recently about is creating more, not necessarily adding more amenities, but adding more, I'll call it commercialized amenities. So what I mean by that is, I'm gonna die on this hill that this short-term rental industry space is professionalizing, and we have to we don't have to look further than look at hotels and what they offer to understand where this is headed. Not in terms of where we want to be hotels, but in terms of the software and the structure and the thing. When you look at a hotel and you stay at a hotel, depending on the star rating of a hotel, you know what you're going to get, right? What type of bed they're going to have, comfortable or not. If you stay at a 2-star, it's I'm getting a spring mattress, and they're going to be all 4 flat pillows, and there's going to be a little PTAC AC unit, and you know what you're going to expect, right? You stay at a Sheraton, you stay at a Marriott, you know what you're going to get. And eventually short-term rentals will get to this place where people will know what they're going to get. And so the people who are going to survive this are going to have to be in it for the long haul. And that means that we need to have things that last the long haul. And that's what I'm calling commercialized amenities. So we have started, myself and my business partner, and some of our properties that are crazy loaded with amenities, we have started to change, rebuild, re-equip some of our amenities that maybe weren't as durable as other things. So for example, we really started with the Kentucky place because that one's doing incredibly well. It's cash flowing a ton. And we're like, cool, let's kind of put this on, try to get this more on autopilot and just like durability. Because we can host up to 28 people in this property. And that's a lot of people. So we're thinking, when you think about it, that's a lot, like people coming in and out, like during, especially the summertime, like there's a lot of use, wear and tear on the property. So not just beds, but we got rid of all the metal beds, but we focused on the amenities too. Like our putt-putt, we had a little mini putt-putt course that was really cool, bourbon themed. It completely got it was getting destroyed and torn up, and then like rain and erosion. It was kept putting Band-Aid patches on it. Handyman out there, repair something, this or that. And I was like, holy crap, we're like fixing this thing every single month. We either need to tear it out or just completely replace it with something else. And we still like the idea of doing that, like having this like unique mini putt-putt thing, but we needed something more durable. And so we went and spent some money getting a commercialized version of it that's going to last the tales of time. And, it's like very, very durable. The material used, the, underneath the foundation, it was like literally what a mini putt-putt place you would go to play mini putt-putt would use on their tracks. So having that, we know this thing's going to last for many years. And we're not going to have to fix anything or worry about anything, guest complaints or whatever. And it's done. And so, this is the same thing. We had a golf simulator that kept breaking. Golf simulators are starting to be a pain in my butt. I'm not going to lie. We put one in every single property and I swear there is a problem. Like it's a technology issue. So we went back to the drawing board. How can we find something that's commercialized, which means it might be expensive, and find something that's going to be more reliable for all these people trying to use it? And so we went back and we found some commercialized ones, simplified our simulator a little bit more, and got a new golf simulator. Like just changing out certain things. And I mean, even the beds. Okay. We had some metal beds and we had some beds that just were constantly need to be tweaked or whatever. It's like, let's put in solid beds. Let's put in things that are going to last the tale of time, that are going to be durable, that we'll have for many years. And we're not constantly worried about replacing it every other month kind of thing. It's exaggeration, but the point being is we're kind of revisiting the idea of the quality of the amenities and the things we're offering to be more commercialized, because that's where the industry is headed. Okay. Now that doesn't change the mom and pop feel and the whole hospitality, Airbnb, vibe that we're trying to give our guests. That's not the goal at all. The goal is to give a quality experience, but more importantly, and this is the key, a consistent experience. And so we've been working on doing that for a lot of people and providing that for them. And it's going to show up in the reviews. It's going to help us long-term. It's long-term thinking. It's not about how can I get the quick win today and stay ahead of everybody today. So anyway, consistency has been one of the biggest key driving factors in our thought process going into 2026 and beyond. So now let's move on to buying. So when buying short-term rentals this year, I kind of alluded to, hey, it's going to be harder. It is going to be harder. There's less inventory. There's a lot of people, and I say less inventory, I'm going to be very specific. There's a lot of inventory. There's less quality inventory. Okay. And the same tired strategies of, go into this market and over amenitize the property and it's going to appraise and it's going to make money. I'm hearing this from realtors, and I'm finding people that are complaining about it, that are losing money because they've saturated that market out to the moon and back. Like it's just too much. So you have to be very, very strategic. Stop thinking like everybody else. I saw this designer post, she's promoting her designs. She posted a picture of this kid's bedroom. And I don't want to call anyone out here, but I've just seen this again. And when I say this, I'm not saying it specifically at her. I've seen this multiple times. So it's kind of this thing, but it's she posted a picture of a kid's bedroom, with the little slide in it that goes down and all the walls are different colors. And, it's just this bright, colorful room, and it, it looks good, fun and amenitized or whatever. And it's got that little half slide turn thing. And And I'm like, and she's like, as hosts, we really need to step it up, and this is how we do it. And I'm like, you're literally doing what everybody else who thinks they're being innovative is doing. It's the same thing. It's not innovative anymore. It's literally like you're doing it to keep up with everyone else. So the mindset needs to shift from when we're acquiring and searching and trying to figure out what's going to work in these markets is not what works for everybody else today, but how can I separate myself from the competition? How can I find that moat and be permanently ahead of everybody else and not have to worry about constantly changing colors, adding loads of amenities just to compete in a market? I'm finding that the people who went in and did that to some of their properties, they're constantly reinvesting into their properties just to add the biggest and next best amenity because that's what everybody else is doing. It's just chasing after the neighbor or keeping up with the neighbors. What's the term? It's keeping up with the Johnsons. Oh, the Johnsons have, I got to have it too. And everyone has it. Sure, it looks great. I get it. It looks great. Awesome. But everybody else is doing it. So now, if you're already in that market, doesn't necessarily mean it's wrong to do what everyone else is doing. Not necessarily, but keep in mind that's not going to get you ahead. Right. So, and it's the same thing with the vendor saturate. I think it all ties in together. Kind of crazy world, the kind of crazy theme that we're in of the saturation. But if we understand the space is commercializing or professionalizing, is probably a better term than commercializing, and we understand where it's headed, we need to be thinking way in advance, not, thinking about tomorrow. It needs to be like next year and the year after that. And I think part of that is how we design our properties and what we look for in our properties. The flashy properties can look good today, but will they look good tomorrow? Maybe something a little bit less trendy is my point, and more consistent, more classic, more upscale luxury that people will enjoy at any period of time with the same amenities and things, but just more, I like the word classy. Classic is probably a better term than classy. Classic, because the trendiness, we're kind of hitting these points in time where I think the trends of what short-term rentals are going to have is going to change, and the color schemes and all that's going to have to change, and people are going to have to change every 3 years of what they're doing in their properties, which is expensive, which kills your returns, and no one's planning on that kind of stuff. So keep that in mind as you're investing this year and thinking about your investments in 2026. If you wait till the end of the year, it's going to be ultra competitive to find a good deal, and you're going to be buying purely for the tax savings. Don't do that. Start your search now. Take this as your I need to start searching. Let's start searching. And as always, if you need help, reach out to me. Happy to chat. Let's find you amazing cash flowing property that maximize your tax savings as well. All right, guys, that is it. I hope you enjoyed this episode of Cash Flow Positive. My name is Kenny Bedwell. And as always, if you want to reach out to me, you can find me on Instagram or Facebook at Kenny_Bedwell. I've got some great videos I've been posting recently about the hotel and some other things. So definitely check those out and reach out if you want some help finding a deal, and we'll set up a time and chat. All right, guys, thanks for listening. And I hope you enjoyed this episode of Cash Flow Positive. I'll see you next week.